Markets, Kotak Mahindra Bank is down 1.5%, which means it's recovered from its lows as well. Some statements coming in from Max India promoter not to convert the warrants as the share price is below the conversion price. Max India will come up for you on your screen. The stock is slipped. We'll just wait by for the conversion price of the warrants to also get flashed. It would be much higher than the current market price. Mitesh Thakkar and Prakash Gaba are here with us on the show now. Prakash, afternoon. Your index trade and individual stock ideas?
Well, the target was 10,878. That's been achieved like a dot.
Okay.
Now, beyond this is 10,911. So far, still looks okay to me. So, if it dips, perhaps dips a buying opportunity because the trend is still intact up and has not been compromised. Strong support in the vicinity of 10,850, 830 should be okay on Nifty. So, yeah, big dips can be bought. I have two stocks and both on the long side. Our first stock is L&T Finance. That looks good to me. And I think L&T Finance can see a climb to maybe around 150 zones. Stop below 145, but I think it's going much higher than 150. Second stock that I like is the good old Reliance. That looks good. Target on the upside 1142 to 1145 zones. Stop below 1110, and no conflict of interest here.
Okay, all right. Thanks so much for that, Prakash. Well, let's get Mitesh as well into this conversation. Mitesh, what's the trade on the Nifty?
Good afternoon, Nigel. I think the trend is clearly on the upside. We've broken above that consolidation which was there for last 2.5 days. So the idea should be to get long over here, keep a stop around 10,810 and look for 10,940, 50 as your target. So the risk reward is not very favorable in the sense that it's about 1:1.5. You might not want to buy the entire quantity right now. If you get a 20-point dip, add on to your positions. On stock side, I have two banking names on the buy list. RBL Bank is a buy with a stop at 572 for targets of 606, and ICICI Bank is also a buy. Keep a stop at 352 half, look for targets of 370.
Any trade, Mitesh, on Kotak Mahindra Bank and your disclosures also?
Yeah, so I think one, you can assume that we'll have positions and would have recommended the stocks to our clients. And Kotak Bank, I think, see, it's not showing any much or strong trended signals. It's broken the intraday pivot levels. So I think max it can come down to is about 1200, and on the upside 1270, 80 should be a range. So I think it will be in a range of about 70, 80 points if you're talking for the next 5 to 6 days.
And Prakash, disclosures?
No disclosures at all.
Exclusive in his first ever interaction after the mega $3.8 billion GSK deal, HUL CFO Srinivas Phatak spoke to me about the Horlicks strategy to drive growth and synergies. Here's a slice of that conversation.
The way we need to approach this category is through the lens of market development. If you look at all India penetration of the HFD segment is about 24%. If you look at rural, it's about 14%. If you look at some of our more advanced categories, our penetrations are as high as 80%. So that starts to give you the possibility and the opportunity of what you can do with this business. And that's why we said that we expect this business to grow in double digits into the medium term. Clearly, there are 3 or 4 elements. We will work on the product. We will look at the communication. And distribution is absolutely going to be playing to our strengths, and that's where we can make a difference. All 3 will be at play. And we are quite confident about growing this business well.
What about a brand extension? And the reason I ask is because, say, a competitor like Bournvita, it's in the MFD category, plus it has biscuits. And biscuits is what? A 25, 30,000 crore kind of an opportunity or market. So would you look at, say, a Horlicks biscuit or any other brand extension in the future?
I think first and foremost, I think our focus is really going to be on the HFD category. It's a 7,700 crore category, easily can grow in double digits into the near future. I've talked about the penetration levels. And with Horlicks and with Boost, we're getting some couple of iconic brands. So therefore, I think the first focus in the first few years for us is to really go behind the HFD opportunity and to realize the benefits of this. And in due course, we will look at the rest of the portfolio. There are some very interesting nuggets, but first and foremost, it's all about HFD.
Okay, but this is a new category for you and one which is slowing down. Would you be a bit concerned about the MFD category?
So predominantly, if you go back and see, this category has grown at about 14-15% for over a decade. Yeah. And done very well. If you look at it from a demographic point of view, you look at rising affluence, if you look at it really from the micronutrient needs of the kids, there is ample headroom to grow. I think as a market leader, the bigger opportunity is leading market development and increasing the size of the price. Therefore, I think, we think it's a fascinating category of brands of the future. We are not at all concerned about any slowness. we are quite confident that this category will grow in double digits into the medium term.
But people are concerned on account of the high sugar content in these drinks. So how are you going to tackle that? Is there any kind of disruption that you're planning in the key product?
So I think it's also important to dispel some of the myths. I think the sugar content that is being talked about is not that big a concern. Having said that, it's still at very, very healthy levels in the overall portfolio. There is a strong set of innovations to really cater to different needs. And from whatever we have seen, they have the products, they have the R&D. And we will be looking at all that aspects post the merger really happening, because today we've actually bought into the asset. But one needs to remember that it's at least 9 to 12 months away before we actually get the merger done.
Okay. You've spoken about synergies of 800 to 1,000 basis points. How will you achieve it? And secondly, by when?
So what we've really talked about is that the opportunities are across the value chain. I think first and foremost, if you start looking at it from a supply chain point of view, actually, let me wind back. I think the first and foremost way to look at about synergies is it all comes from the strength of an existing HUL business. We are a 35,000 crore business and we are adding 10%. So therefore, the whole infrastructure and what you have, you will leverage. We've called out about 4 or 5 areas. Clearly, in the whole space of supply chain, logistics, distribution, warehousing, you will ride on the strength of HUL distribution. That's going to be a big plus. The way you go to market in terms of your distribution and how you're going to take costs out, that's going to be an important one. We spend media, which is media and non-media, which is 7x what GSK does. Therefore, buying scales, the sophistication, the technology that we have is going to really help us unlock costs. And in due course, we will get general and administrative overheads that will also come through. The focus first and foremost is the proposed merger, get the approvals. The second focus is really going to get the integration done. Then we really need to get the growth momentum, and then the savings will come. I'm not going to give you a time frame, but we are very confident of the size of the price. And of course, all our efforts will be in trying to see how much can we realize it earlier on in the business case than later.
4-5 years would be a rough estimate?
So as a medium term would be a good space to start counting them. Most of the synergies coming through would be a good.
Take a look at the crude oil prices, because we are starting a third straight week with some gains coming in there. With the kind of losses that you saw in the months of October and November, December actually has started quite well for the bulls, especially for the crude oil. And we also have seen the speculative long positions continue to build up here. The expectation that the US rig count has been declining. Saudi Arabia is going to export less crude to US refiners. And of course, there is a cut anticipated from the 1st of January 2019 between OPEC and OPEC allies is something that also seems supportive for the market. There are, of course, demand concerns from China and Europe, and that continue to keep a lid on the prices. As you can see on your screens, positive beginning, but not such a great run-up as you can see. Aurobindo Prasad Gayan then joins us to help you make strategies in that space. Aurobindo, hi. What is your sense now for the crude oil prices? At these current levels, how do you expect the week to begin?
Well, I think the sentiment hasn't changed much, though we are seeing a little bit of revival in the prices sometime last 1 week or so. But then I think the new production cut and all story will start from the beginning of January. But then we have, in the very short run, maybe some sort of further price correction could be there, though we have seen prices trading between $52 to $52.5 range. $2.5 kind of range. So since we had seen a price upside towards $52 in the last week, so I think price might correct a bit down from here. So for this week or maybe for next 1 to 3 trading sessions, if I would say, I would like to go short from higher level. So for the Indian market, call would be going short around 3750. We'll definitely have a target of within 100 rupees. The target that we maintain is 3650 with a stop loss of 3800. So since it is trading in a very narrow band, we'll continue to trade within that range, and for this week, we'll recommend selling from higher.
Okay. Aurobindo, also, how do you look at the precious metal prices now? Because, before we get into that all festival mood from the next week, the major event before the year ends really is going to be the US Fed meeting tomorrow and day after. What are you expecting? How do you see the gold prices reacting to that? And at these current levels, how would you hold them?
I think volatility is something that we can all definitely rule out. We had seen Indian market prices going above 32,000 rupees, but then it's been multiple years since 2015 that every time gold price goes up 32,000 or 32,200 rupees at the Indian market, then again it corrects down to 31,000 levels kind of range. So I think this time also we have seen the same kind of band. We have seen prices coming down from 32,200 and now it's around 31,500. So I think a bit of declining in the gold prices is something that is visible in a couple of trading sessions. So I think both gold and silver will plan and recommend to going short for next 2-3 trading sessions from here. And we should target 31,000 as a price to see at the Indian market, whereas silver below 37,000 is something the target we can see in next couple of trading sessions.